A very good evening, everybody. Welcome to the live webinar on Hong Kong Market Focus, Key Sectors to Watch in Q3. I'm Ming Hui from Phillip Nova, and speaking to us tonight will be Mr. Alvin Li, Director of Equity Derivatives Sales Asia at UBS AG. Before I pass the time to Alvin, please be reminded that if you have any questions throughout the course of the webinar, you can drop them into the questions box and we will address them during the live Q&A session towards the end. And you would also want to stay tuned for our quiz segment where 5 lucky winners will win a $30 Grab voucher each. And now, without further ado, over to you, Alvin.
Hello, thank you, Ming Hui. Hi, everyone. Just want to make sure that you can hear me and you can see my screen. Actually, let me share the screen. So give me 1 second.
Yes, we see your webcam as well as your screen perfectly.
Okay, cool. Thank you. Hi, everyone. Good evening, and thank you very much for joining this session. My name is Alvin Li. I'm from UBS, so I'm responsible for the issuance and investor education about the product that we list on the SGX market that is called a daily leverage certificates. And I am not sure how many of you have invested in this daily leverage certificates before. And for those of you who haven't, I think it would be great for you to maybe understand a bit about this product. And then for those of you who have invested in it, if you have any questions or like good or bad experience investing in it, feel free to let me know. Okay, so I guess tonight I will first give a bit of a review of the sector's performance in the second quarter this year on the Hong Kong stocks, and then I'll pick a few stocks that are basically of the other best and worst performers in the Q2, and then I'll also do a case study of the DLC on those stocks. Okay, because DLC, some of us may see DLC as a day trading product, but I also understand some investors, they would trade this product for a longer period of time. Some even maybe invest it for a month. And then for those who really understand products, they may hold it for even longer, maybe sometimes even a few months. So I will do a case study for those. And then I will lastly, I will go back a bit to the DLC basic of when we have a strong view on some underlying stocks or index, what DLCs would be suitable for us. Okay, I will walk through a bit of how we can choose the DLC that is good for us. And then lastly, I will also focus a few sectors that I think would be worth looking at in the third quarter, because actually some of them are I guess maybe you are already watching already. So, and then together with the related DLCs on those. Okay, all right. So first of all, this is our website, and as you see, the link is very simple. It's a dlc.ubs.com. The product is called Daily Leverage Certificate. It's been around for quite a while. I think by now it's already say I think 6 or 7 years already, and then that's why I guess some of you already invested in it. All right, so our website is quite useful. That's why I didn't even prepare any slides. I just used the website to demonstrate how to use the website, as well as also at the same time to to basically introduce the products to you. Okay, so first of all, today is actually a pretty good day for the Hong Kong market. As you can see, the Hang Seng Index today rebounded with more than a 300 points gain, more than 2% daily gain. And then you can see that, for example, two related DLCs on Hang Seng Index. The first one on the left is the HSI 7 times long. It went up by around 9% today. And then on the other hand, there's a 7 times short DLC that went down because the index is up. And this short DLC today dropped by around 14%. And sometimes when we look at the performance after market close, it may be a bit off because sometimes because this is talking about the market maker quote. Uh, okay, maybe I haven't mentioned this because we are the issuer of this DLC as well as the market maker of it. So we have an obligation to provide a continuous bid and offer quoting. So this price that you see, 2.35, 1.35 is actually our bid price. But then sometimes right before close, market makers would uh, widen a little bit the bid and offer right before close because this is, I would say, is quite a common practice for market makers to do so. Okay, so that's why sometimes when you look at this performance after close, you see it a bit off. I'm sure if you look at it intraday, you would find it quite in line in the sense that both the long and the short would be quite symmetrical in terms of the performance if they are of the same leverage. And then at the same time, they will also be quite close to the leverage factor times the underlying performance. For example, today you see the Hang Seng Index is up by 2%, then you should expect a 14%, right? 14% up on the Hang Seng Index long 7 times, and then 14% down on the Hang Seng Index short 7 times. So that's what I was talking about when I said in line. All right, and so in terms of what actually happened in Q2, I'm sure some of you already are aware, some of you that already are investing in Hong Kong stocks. In Q2, actually, in there was a big rally in from mid-April to mid-May on the Hang Seng Index and also the whole Hong Kong market as a whole. And then if we look at here, okay, this is the chart of Hang Seng Index, and then you see that basically this is it's been hovering up and down beginning of the year, and then in mid-April is when it got a really big rally going up from mid of the month to the around mid-May, so around 1 month's time. This is already the so far is the most bullish run on HSI in the year, and then that was quite encouraging back then, going up from 16,000 ish to more than 19,400, 19,500 actually. So it's more than a 3,500 points upward movement. All right. So imagine if you had DLC on this, and then maybe if you manage to invest, maybe when you saw Hang Seng Index break above this previous high. All right, maybe let me draw a line here. That would be easy. So imagine if you bought a 7 times long when you see that Hang Seng Index broke above this level, and then even if you were only able to catch maybe half of this trend, it would still be quite a lot, right? Especially when you can find a 7 times long or short on the index, because for single stocks you only see a 5 times long or short. Okay, so that was the biggest bullish run on Hang Seng Index, but then after that it started to come back down a bit. So if you look at the overall second quarter performance, I think for HSI you didn't really see a very astonishing result on HSI. But then in terms of sector, in terms of single stocks, actually some of the stocks actually perform, especially those that are not the biggest index constituents. They tend to be able to outperform the index, and some actually underperform the index by a lot. And sometimes those are where the opportunities are, right? Okay, so actually in second quarter, the best performing big let's say big stock is actually, you guess it, is the this one is the CNOC. All right, it's an oil company. A lot of you I guess already know. It's the Chinese oil company, and then in basically it has been on a bullish run. Basically, I think since the very beginning of the year until now, even at this moment, it's still considered one of the strongest moving Hong Kong stocks of the year. All right, so this is from January till now. It's always an uptrend, right? And then even if you what you consider when the index the biggest movement was from mid-April to mid-May, it's actually it's for this stock during that period it's actually up less, I would say. But then overall it has been on a bullish run. And then I want to point out that for DLC, if you have a stock that is going in a trend like this, it's actually a very good stock for you to consider investing in the DLC of it, because DLC is a trend trading product, and for these stock that have a trend like this, usually you would I think you have a like a more likely than not have to have a compounding gain on the related DLCs. So that is something that I think we should be aware. And then so CNOC is the best performing stock in the second quarter in terms of the DLC underlying stocks. And in terms of Hang Seng Index constitution, it is not. Some other stocks perform even better, but some of them may be considered too small in terms of market cap, or some too little in terms of turnover to be considered, for DLC issuance. But then those are still Hang Seng Index constituents, because nowadays we are talking about Hang Seng Index having more than, I think, 80 members already. All right. So this is the best performing stock. And then the second, also quite well-performing stocks in the second quarter is actually another, I would say, very like Chinese traditional stock is the China Mobile. All right. So China Mobile in second quarter also has been on a similar bullish trend, I would say. All right. So actually this year so far is actually not those tech stocks, or not, any other maybe like a more, I don't know, gimmicky sectors. It's actually the more traditional sectors that have been performing better. All right, so this is the China Mobile. And let me also go through. Okay, you may imagine what is the worst performing sector or stocks in second quarter. It's actually more on the domestic consumption, I would say. So first of all, this is one of the domestic consumption example. This Li Ning is a sportswear company in China, and then you can see that in the second quarter, it's not been performing very well. And then actually just recently, after as the third quarter starts, it's actually keep underperforming the main board market. All right. So I think overall, if we look at domestic consumption, actually most of the stocks have been underperforming even until now. And then lastly, is also I would say it's also consumption related, is the Macau gaming sector that we also have a DLC on it. I would like to go to Sands China. Yeah. So Sands China also has been doing very badly, I would say, in the second quarter as well as until now. All right. So the thing is, the thing I would like to point out is what actually happened on the DLC of all these stocks. Okay. So let me pick up some examples. For example, let's first go back to the CNOC, the A3, the oil stock. All right. So for a stock like this, having a very good trend, basically, if you look back on hindsight, anytime we got in, it's still very high chance to make money, right? And imagine if we had a long DLC on it. So this related DLC having a ticker of a SNEW. It's a CNOP DLC, and then it's a 5 times long. And then we are the issuer, UBS, and then this DLC will expire in 2025, February 28th. All right, so this is basically, the name already tells you quite a lot about what this product does. And now it is trading at $2.8 ish. I think when we first launched this DLC, it was much less. I think maybe we launched it at I don't know, $1 something. But then we can easily track the performance. All right. So today, I think if you look at here, let me maybe zoom in a bit. So, okay, let's just quickly walk through what we need to look at for DLC. First of all, the most important thing is that the DLC, is it a sensitive enough trading product? All right. So we look at this sensitivity. Sensitivity is for this DLC is 2 cents. This is as of yesterday. So every day we update this value, and then this is just reference value. Basically, tells you in general this DLC. When the stock moves by 2 cents, this DLC would move by one tick, up or down. All right. So for CNOC, I think CNOC the one tick is 1 cent. So whenever the stock tick up or down by 2 ticks, this DLC would tick up by one tick. So it's still considered quite sensitive. All right. I think the point here is that we should try to avoid DLC that are too insensitive, meaning that even if you see the stock going up, down like this, there are a lot of intraday range, intraday potential trading opportunities. But then the DLC, because it's not sensitive, then maybe it won't even tick up or down by one tick in a day. So those are the products that we try to avoid, right? So for this one, it's still considered quite okay. And then this let me see. Sorry, my bad. This DLC is actually much more sensitive than what I said because I mixed up. I thought the DLC, I thought the underlying stock one tick is 1 cent, so I said 2 cents would move it, but it's actually not. It's actually so you can see here. It's actually that the thing is that one tick is 5 cents for this stock because this stock is considered is more than $20. One tick is 5 cents, and then only two ticks would already move the DLC, meaning that actually when the stock moved by one tick, this DLC would take up by 2 to 3 ticks already. So this DLC is actually very sensitive. And then if you look at here, sensitivity in ticks, meaning that 0.3 ticks in the underlying will move this DLC. So in intraday, if you are a day trader, for this DLC, you will see it going up and down very quickly. And it's a very sensitive product for us to, if we want to do day trading. All right. So this is something that I would like to highlight. It's about the sensitivity. I think most of the other details are not very important. And yes, and then I probably would not go too much detail about the airbag for the purpose of this seminar, all right? And then, so I would like to focus on the performance of this DLC when there was a big bullish run, right, on the stock. And then, first of all, I guess I consider this is understood by everyone already. So when we say 5 times, we're talking about the DSC will go up by 5 times of the percentage movement of the stock on a daily basis. That's why this product is called daily leverage certificate, right? So that's why and you will see that if you hold this DLC for longer, for say a couple of days or even a month, you will see the overall performance on the DLC would not be 5 times of the overall percentage performance of the stock. All right. And but the thing is, it can be better than that. It can be worse than that. It's a DLC is a path dependent product. So that's why we would really have to look at how the stock end up being, much higher. Is it over the course of this up and down movement, whether the stock is actually trending or is it like a very volatile movement? This can affect the overall DLC performance by a lot. All right. So if we go down here, this is the historical compounding return section of every individual DLC we have. And then if we go down here, all right. And then you can select a period for, say, the, let's say Q2 from April 1st to June 30th, right? Okay. Then during this period of time, the AA3, the stock, went up by 20%, and the DLC went up by 84% with a leverage is much higher than the stock. And although here, it is not exactly 5 times. It's actually underperformed 5 times because we are talking about holding a DLC for 3 months already. So a lot of the, I would say every leverage product, either implicitly or explicitly, they would charge you the holding cost. DLC does it as well. Okay. And then for if you invest in other leverage product, for example, CFD or any other, you see that you are being charged the interest, right? Because you actually have to pay. It's like you're borrowing money to invest in the stock. So you will be charged the interest cost there. So DLC as well. DLC have this cost embedded. But the thing is, after all the costs are charged, the DLC will still perform with this performance. And I think for this case, we have a bit of cost, we have a bit of compounding, either gain or loss, and then this is the result that you end up having. It's still considered quite good, right? All right, but this is for the CNOC only. And if it was on some stocks that is on an even better uptrend, for example, the one that I also mentioned, China Mobile. All right, let's go to one of the related DLC, long DLC on China Mobile. All right, let's say this one. And then if we go to the historical compounding return again, and then we go to select also the period. So April 1st, all right, to 30th of June. All right. So during this period of time, China Mobile also went up a lot. It's a little bit less than a CNOC. It's went up by 17%. But then the DLC on it went up by 91%. So the DLC actually performed better than the CNOC DLC, even when the stock was up less. In this case, there's a huge compounding gain we are talking about, because 5 times of this is how much? Is 85%. And then the DLC even outperform this 5 times performance, even after all the costs are charged already. So when you have a stock that is stable and then is trending, so you have to fulfill these two conditions. It's trending and then it's stable, then you will have this performance. All right. And then actually, you may wonder, in this period of time, what happened on the short DLC on it, right? Let me choose another example to illustrate this to you. So if we go to Sense that is underperforming, right? And then we also check the short DLC during this period, the short DLC, and then it would go up by quite a lot because we are talking about, let me just type. So we are talking about Q2, all right? Oops, sorry. Okay, maybe better this way. All right. So Q2, in this period of time, Sense was down by 29%. This DLC went up by more than 268%. It's outperformed. There's a huge, very big compounding gain here. Okay. And then the thing is, sometimes people will say, oh, I would not be able to catch the whole trend, right? But then sometimes the strategy on DLC that some would use is that sometimes you don't really have to guess whether the stock would go up or down. Sometimes you can bet on the stock will go in a trend. It's either uptrend or downtrend, meaning you can invest in both long and short DLC of the same stock. All right. So let me open up another tab, and then I show you a long DLC in the same period. So let's say if you believe that Sense would go in a trend, but you just don't know the direction, and then you can invest in this long DLC. The long DLC is here, and then I will change this to the same period. All right. So for the same period, you can see that, right? The stock performance is the same because we're talking about same period. So you can see the 1928 performance, 29% down. The long DLC was down by 87%. The short DLC was up by 268%. Meaning that if you invest in both, you would end up making roughly 180-ish percent. So this is I think one of the beauty about DLC. If you invest in both long and short, you can actually bet on the behavior of the stock. But obviously you're betting on the stock will go in a trend. If the stock doesn't, both long and short can underperform the stock. Okay, this is something that I have to emphasize as well. If the stock doesn't go in a trend, you end up having compounding loss on both the long and short. Okay, so you can hold a DLC for a longer period of time when you believe that you already understand how the compounding works. If you don't, then don't hold the DLC for too long, or you can even day trade a DLC. If you day trade a DLC, then obviously there will not be any compounding return on it. Then the DLC will simply just behave 5 times of the daily performance of the stock. All right. So this is something that is about the one of the best and worst performing sectors in Q2 that I would like to show you. And then lastly, let me see. Okay, so I mentioned that I'll go back a bit to talk about DLC basics on, in terms of how to choose a DLC, right? So let's go to some of the stocks that, let's pick one of the stock that is performing pretty well today. And then actually, Hang Seng Index itself is already doing pretty well today. And actually, some of the stocks that are performing pretty well today, I think one of them would be Alibaba, because we're talking about, on news that we see that some news say that Ma Yun is already showed up in China, and then that's on the news, and then still, so you can see that Baba actually today performed pretty well. And so if we pick Alibaba, all right, so the thing is, if you think that Baba will continue to go up in the coming days, so it's a short-term view, you want to get some leverage, and then you want to buy a long DLC, and then the question would be, oh, which one should I buy? Because there are quite a few DLCs for I to choose, right? So if I go to daily long 5 times, I will still see 4 basically the same DLCs. All of them are 5 times long Alibaba. They have a different expiry, but that doesn't really matter because it's not going to expire soon. So, and you are not going to invest in it for months. So that's still fine. So the only difference left is the price and also the sensitivity. So that is something I would say that's pretty much the only thing we need to consider when we need to choose a DLC. All right. So you have 4 DLCs here. You can sort them by sensitivity. And then you can see that sensitivity value, if the lower it is, the more sensitive it is. So 14 cents is the smallest value among here, is considered the most sensitive DLC because only 14 cents movement in stock would trigger 1 tick move in the DLC. And for this stock below, it doesn't make sense anymore because it's a calculator, right? So $282 in the stock would move the DLC by 1 tick. So this DLC simply doesn't, we can't even quote on this DLC. It's just that this DLC still hasn't expired and it's still staying on the shelf. And then, but then because the value is just too low, we are not able to provide quote anymore on this DLC. So, and then you can also see that the value is only 1 cent. And then for this DLC itself, even less. Actually, these two is both of them are, I don't think we are able to quote anymore. But then you still have 2. One is at 4 to 5 cents. Another one is around 10 cents. Actually, these 2 are both okay, I would say. And then let me see how much is a tick in the Alibaba. If we also choose this sensitivity ticks, then we'll see that okay, 3 ticks of Baba would move the first DLC by 1 tick, while 7 ticks would move the DLC by 1 tick for the second product. And obviously the first one is better. But then the thing is, you see that the first one is at a higher price, right? And then some people would, when they do not understand this sensitivity concept, they would think that, okay, maybe this one at 4 cents is better because it looks cheaper. But it actually, the only thing that's different is that this DLC, the value is lower, the price is lower, but it doesn't mean that it's cheaper. Because whether it's cheap or not, we cannot look at it by looking at the price, all right? And then we actually need to look at it by looking at how much cost is being charged on the DLC. But I can say that actually for these two, the cost is largely the same in terms of the percentage. All right. So it's actually the first one that's better. And then this is something that I would like to highlight to you is that we need to look at sensitivity when we choose DLC. All right. And if you end up buying the second one, it's still not too bad because you still get to tick up and down in a day. But then if you end up buying the third one, then I would say it's a bad choice because the DSC simply doesn't really move with the underlying. All right. Okay. And then I think lastly, I think I would like to share a bit about you know some of the potential sectors that are worth looking at in Q3. Actually, today is already Q3, and then okay, we all know that Nvidia has been performing very well, and then we're still talking about the whole AI sector or AI related themes. It's not only those the chips, the semiconductor stocks or the chip building stocks that are um, benefiting from it. There are also other related stocks that are also have been performing very well, and very likely this will still be the theme in a short period of time at least. And then, but then obviously Nvidia is not listed in Hong Kong or SGX, right? So the thing uh, is there any other similar stocks that are listed on Hong Kong and having a DLC on the SGX, all right, that we can look at, right? I think there will still be some. I think first of all is the Baidu, all right? I guess we all know what Baidu is, right? Okay, so Baidu is basically China's Google, and then they have built their own AI model. They actually, among the Chinese counterparts, I think they were basically the first company who rolled out their AI model, the Wenxin Yiyan, all right? And then we didn't have a DLC on this stock before, and then we just list this new DLC I think just a couple of days ago. And then this stock is a very it didn't perform very well until lately, actually until today. I have to say it's actually until today. So this stock today went sorry, I think this is not today's performance. This is yesterday performance. Okay, today this stock went up by around 2%, and then yesterday it was up by around 10%. Because this stock, what it does is that it first of all it does its AI model, and then obviously it's also a search engine, and then the other thing is also does a lot of auto driving for the it's like for those like a DD, it's like those Uber in China, and this is one of its business as well. So that's why because of this auto driving Uber equivalent business in China, um, it went up by a lot just yesterday. And then I think if we are talking about the AI related theme, this is also one of the stocks that is worth looking at in the coming months. All right. And then we have got this DLC on it. And then this DLC, we launched it just in time because when the stock went up by 10%, this DLC already went up by 50%. in just one day. All right, so I think this is something that we can worth looking at. And then the second one is also AI related, is the fact that Apple will launch basically AI powered iPhone, right? For the iPhone 16, that can use ChatGPT to automate a lot of stuff. And then that's why Apple itself obviously is already record high. It's been going up by, I don't know, 7 or 8 days in a row. And then also there are related sectors in Hong Kong. And one of them is Sunny Optical that basically does the cameras for the iPhone. All right. So you can see the Sunny Optical here. Sunny Optical just today already performed by quite a lot. Today, I'm sorry, there's somehow some data about the underlying. All right, so this is still showing the previous day's data, but then today, 2382, Sunny Optical, the stock is up by quite a lot. While when we look at that's why when we look at the DLC, it's actually up by 23% just today. So today the whole Hong Kong market is rallying, and then a lot of the sectors, especially the AI related sectors, the mobile related sectors, Sunny Optical, one of them, is actually also going up by actually much more than the index itself. So I think this will still continue to be worth looking at in the coming days or months. And then lastly, I think the last sector that I think we can probably see a rebound would be the Chinese EV. All right, for example, the BYD or the Geely, these EV stocks would probably be worth looking at, because previously I think investors were concerned about the tariff that they would be charged, and especially by the US and also Europe. And actually all these are already decided, and the tariff is already confirmed to be 40% or 45 or 50% for, by either US or Europe, and all these are already decided. So, and this could be one of the reasons why we see that recently these EVs are start to rebound by a lot. And then I think for DLC related underlines, we have BYD as well as Geely. But I think for Singaporean investors, based on my observation, I think usually they prefer Geely more than BYD. I don't know, for some reason. And then if we look at this Geely, actually just today it also went up by 10%. The stock itself is not too bad. It went up by 2, so that's why the DLC is up. And then let me pick an older let me pick an older DLC for us to check out the performance. So if we, for example, we have this long DLC that yeah, I think it's this one. Yeah, let's pick this one. So because previously Geely has not been performing very well, right? It's up and down and up and down, and that's why. Okay, overall it's still down by 13%, and that's why you see a DLC on this is actually down by quite a lot. But then today, we start to see quite a pretty good rebound. So I think this will continue to be a sector that we should look at in the coming days or months. All right. So if there's any questions about DLC, feel free to ask in the Q&A session. And then I hope you learned something about DLC tonight. And then if there's any question even after tonight's webinar, you can feel free to call us here at this phone number or this email. And if you would like to stay up to date for DLC information, you can go down on our homepage, go down to this section, and then just type in your email to subscribe to our newsletter. We'll be sending out newsletter for DLC every Monday and Wednesday. Okay, that will include the stock that we are featuring, as well as the related DLCs on it. All right. Okay, so I guess I will pass it back to Ming Hui for the poll.
Sure. Okay, let me just share. I'll change myself as the presenter so I can launch the poll. Sorry.
Sure.
All right. Okay, here's the poll, everyone. So the first person who gets the answer correct will win a Grab voucher worth $30. So please go ahead and answer this first question, which of the below was best performing DLC underlying Hong Kong stocks in Q2? Wait, give it 5 more seconds while we wait for more answers to come in. All right, most of us voted for A. Is that the right answer, Alvin?
Yes, that's correct. That's CNOC.
Right. Okay. Now moving on to the next question. Question number 2. What is the highest leverage factor for DLCs on a single stock? Is it A, 2 times, or B, 3 times, C, 4 times, or D, 5 times?
That's an easy one, I guess.
All right. 5 more seconds. All right. I'm ending the poll right now. Yes, everyone got it correct. The answer is D, 5 times. And let's move on to the next question, which is question 3. How long can you hold a DLC for? Is it A, DLC is only good for day trading, or B, a few days, C, 1 month, or D, a generally short term?
I think maybe let me simplify a bit. So I think the the fourth answer is supposed to be it's generally short term, but then you can hold it for longer if you understand.
Sorry, there's some static going on. Could you repeat what you just said, Elvin?
Yeah, I'm sorry. I was going to clarify that I think the fourth, the D answer is that it's generally short term, but then you can hold a DLC for longer period of time if you understand how compounding effect works.
All right, thank you for that elaboration. And obviously, the answer is D, the one that Elvin had to elaborate on. So, D, generally short term, but you can hold longer as long as you understand the compounding effect. Yeah, so majority of us
Yes.
got it correct as well. Moving on to the fourth question, which is which feature below is not a DLC product feature?
Which one is not? Yeah, so is it A, fixed daily leverage? Is it B, implied volatility impact? Or is it C, compounding effect?
Okay, 5 more seconds before we close this question. Is it A, B, or C? Okay, ending the poll right now. And the answer is B, implied volatility impact. So about half of us got it correct.
Right.
Yeah, okay.
That's a
So
yeah, actually a bit surprising. Okay.
is there anything you want to clarify here for this question, Alvin?
Uh, DLC, maybe some of you who invested in structured warrants would think that the implied volatility can be I don't know, like a factor that affects the price. That is for warrants. For DLC, that's simply no implied volatility impact. But obviously, DLC being a fixed day leverage product is a fact. And then, yes, obviously, there's a compounding effect as what we just discussed.
All right, thank you. Now moving on to the last question, question number 5. Which factor should you consider in choosing a DLC? Is it A, price, B, sensitivity, C, market making consistency and stability, or D, all of the above? Okay, 5 more seconds before we close the poll. All right. Okay, most of us got it correct. It should be all of the above. Yeah, great. Alvin, is there anything you want to elaborate on for this question?
I think that so for us, okay, my job is to do investor education, but also another part of my job is to promote the business, right? And so I guess you all know that there are more than not just us, right? More than one DLC issuer. So I guess when we compare DLC, just now I mentioned that we should look at sensitivity, but then also another thing that's also quite important is when we choose DLC between different issuers, we also should pay attention to how the issuer is quoting and whether the quotes are tight enough, whether the quotes are the size is big enough, and also whether the performance, most importantly, whether the performance is in line with the underlying stock. So this would be something that we want to consider as well. So that's why I put in the option C. That's a market making consistency and stability, and obviously together with sensitivity and price, all these are something that we should consider when we choose DLC.
Okay, thank you for the clarification and explanation. I think we can move forward to the Q&A session. Right, I have a few questions on my hand. Right, okay, so the first question is, if I own a dividend paying stock, would I be entitled to the dividends? What do corporate actions impact?
Okay. In general, dividend and corporate action should not affect the DLC performance. When I said it should not, meaning that if there is a known dividend to be paid today, then on ex-dividend day, the stock will go down by the dividend amount, and then the rest will be because of the sentiment, right? And the dividend amount itself will not change the DLC price. And then, but obviously the rest will. And then, and basically what we will do on ex-dividend day is that there will be a adjustment in our calculation formula to reflect, to adjust the previous closing price of the stock so that the performance will be based on ex dividend previous close of the stock, so that there will be like a actual performance for us to take into account when we calculate the DLC performance. And it's the same idea for corporate action. But then corporate action sometimes, if we are talking about like all those standard corporate action, then it's quite easy, like a stock split or right issue or special dividend, all this kind of I would say a more common, a more standard corporate action. Then um, usually there's no basically it's very easy to calculate the formula as well to make sure that the corporate action itself will not change the DLC price. When let's say a stock is going to do a like a 2-to-1 split, for example, and then the stock become half the price. I guess no one would expect DLC to be also half the price, right? So this will not happen. But then I think quite rarely there could be cases where there's a very complicated corporate action that might affect the DLC price, and that in those cases, I guess most importantly is that we'll check with SGX, and then we'll make sure that I think every issuer in the market would perform the same adjustment on the DLC in order to be fair.
Hey, thank you very much for your answer. The next question is, why should I look at DLCs for US equities when there's already TQQQ ETFs traded actively during US hours? What benefits are there for looking at DLCs?
Oh, thank you. This is a very good question, and also quite interesting one. Uh, to be honest, if you are already very actively trading in the US market, uh, to be honest, to be very honest, really do not see a lot of reason that our DLC on the SGX tracking the US indices would be strictly better than TQQQ. To be honest, I don't really see a lot of reasons. And TQQQ is also very liquid, and I think it's much more liquid than any DLC we can find on the SGX. So I think the only thing that is left would be uh, if you have a like a Singapore brokerage account, and if you have already have Sing dollars, and if you just don't want to face any forex exchange conversion rate, and then if you also have a longer term view on the US stocks, and then you can consider investing in this DLC, because if you invest in the DLC for US stocks on the SGX, then you're pretty much forced to hold it overnight, because the during Asian hours it just doesn't really move a lot, right? So I guess for some people who want to have a longer term view and they don't really mind, then some of them might as well just invest in it. And not, I think maybe maybe many people would have a US account already, but I guess it's still not every single one. So for some of the people who still only have a Singapore brokerage account, then maybe this the only thing that they can go to.
Okay, thank you very much for your answer. I think we don't have any more questions. So if there's anything you would like to share with the crowd to close the session, this would be a good time to do so.
I guess I hope you learned something about DLC tonight, and then just feel free to let us know, because I think we need a lot of good feedback from you. So if there's any questions after tonight, feel free to call. When you maybe try a DLC, and then if you still have any more questions, then just call us anytime, because our hotline we have people dedicated to answering it during SGX trading hours. So call us anytime, and then also you can consider subscribing to our newsletter.
Okay, thank you for that, and thank you for your detailed answers in the sharing session. We will send the Grab vouchers to the quiz winners by next Monday, which is 15th of July. And let me take this time to share a promotion for DLCs that Flip Nova is running right now. Yep. So from now till end August, all Flip Nova clients will receive an incentive of $50 if they place at least one trade on any DLC listed on SJX. So don't miss this chance to apply what you've learned from Alvin tonight and be rewarded $50 for it. Open a multi-asset account with Flip Nova today. You can scan the QR code for more for the full promo details. And with that, we have come to the end of tonight's webinar. Thank you again, Alvin, and thank you everyone for your time tuning in. We will be sending everyone a link to today's webinar recording so you can watch it again if you'd like to. Thank you and have a good night.
Thank you. Good night. Bye bye.